A few months ago, something unprecedented happened in Southeast Asia, and almost nobody in the US noticed. It started quietly, officially labeled as a data cleanup, but the result was a financial shockwave. In a single coordinated move, a government began the process of deactivating 86 million bank accounts. Let that number sink in. 86 million. That's more than the entire population of Germany. These accounts weren't emptied by hackers or compromised by fraudsters. They were, with the flip of a digital switch, targeted for deactivation by the state. This wasn't some glitch in the system. As I see it, this was a test. A highly successful test of a new kind of financial control. And it's not just happening there. I'm seeing the same patterns emerge in other countries, each one looking like a pilot program for a new financial world order. Today, I'm going to connect the dots for you, from Vietnam to Thailand to Dubai, and show you how this exact infrastructure is being prepared for the United States. More importantly, I'm going to show you where the money's moving. Because disruptions this large don't just create risk, they create generational wealth for the investors who see the shift coming. This isn't a story about doom and gloom, it's a story about opportunity. Actionable strategies to help you protect and grow your wealth in a world that's getting more chaotic by the day. So, when I tell you a new financial system is being tested, it's not a conspiracy theory. It's my analysis, based on decades of experience watching these global systems get designed and implemented. What I'm about to share is my interpretation of events, backed by government publications, central bank announcements, and on chain data. We're going to cover what happened in these test countries, how it connects to changes looming in the US, and most critically, the four specific sectors I'm personally investing in to profit from this unavoidable disruption. Let's start at the epicenter, Vietnam. In September 2025, the State Bank of Vietnam began the mass deactivation of approximately 86 million bank accounts. Now, the official story was that this was a data cleansing program under a government initiative called Project '06. They claimed it was to fight financial crime and clean up inactive or unverified ghost accounts. But here's how they did it. To keep an account active, citizens were required to link it to the new national digital ID system using their biometrics, their face or fingerprints. The government also mandated biometric verification for any online transfer over 10 million Vietnamese dong, less than $400, and for cumulative daily transfers over 20 million dong. Fail to comply? Your account gets locked. The funds are technically still there, but reports suggest they become completely inaccessible until you can verify your identity with your biometrics. Think about the implications. For an expat living abroad, an elderly person who isn't tech savvy, or a small business owner who just missed the memo, their financial life could be shut down in an instant. The government is hailing it as a success in its goal to reduce fraud. And with that success, the blueprint was validated in their eyes. This wasn't just about cleaning up old accounts. It was about implementing the system of total financial surveillance, linking your physical identity directly to your ability to transact. This looked to me like phase one. Then, just as I was watching for, the pattern spread. Next up was Thailand. In October, Thai authorities announced a major crackdown on fraud, with media reports estimating that millions of bank accounts suspected of being mule accounts for scams were frozen. The narrative, again, was all about your safety and security. But look at what else they did. For vulnerable groups, like seniors, a new default daily mobile banking limit was introduced, in some cases as low as 50,000 baht. While you can raise the limit, it requires extra verification, adding another layer of friction and control. Phase 2, normalizing government intervention in your bank account, was complete. The model had been replicated. Now, let's look to the Middle East, specifically Dubai. The government there has aggressive ambitions to become a cashless society. While there isn't a formal Dubai cashless strategy with a 90% target, the direction of their digital economy initiatives is clear. The key instrument for this is the UAE's central bank digital currency, the digital dirham. It's part of an advanced CBDC strategy. And while there's no firm public launch date, commentary from people close to the project suggests a retail version could appear as early as late 2025 or 2026. A CBDC isn't like Bitcoin. It's not even like a stablecoin. It's programmable money, issued and controlled by the central bank. Every transaction can be recorded on a central ledger. The anonymity of cash is gone. The government has a direct view into and potentially direct control over every single digital dirham. Do you see the pattern? As I read it, it's a three-step playbook. Step 1: Vietnam. Roll out a mandatory digital ID linked to biometrics. Use a crisis or a cleanup as the reason to freeze out anyone who doesn't comply. This builds the infrastructure of control. Step 2: Thailand. Introduce transaction limits and targeted account freezes, all under the banner of protecting citizens. This normalizes the idea that the government can and will restrict your access to your money for the greater good. Step 3: Dubai, UAE. Introduce the final product: a central bank digital currency that makes the entire system seamless, cashless, and completely centralized. You might be thinking, this is all happening in other countries. It could never happen here in the United States. That's where you'd be wrong. The infrastructure for this exact system is being built right now in the United States. It's just happening under different names. You may have heard whispers online about something called the Genius Act. Let's be clear, that's a rumor. No such law has been enacted. It's important to separate rumor from fact. But the reality is even more concerning. There has been a major legislative push in Congress with bills like the Clarity for Payment Stablecoins Act. The goal of this proposed legislation is crystal clear. Any company that wants to issue a US dollar stablecoin will have to become a regulated financial institution. They'll be subject to the full force of US banking laws, including the Bank Secrecy Act, Anti-Money Laundering, AML, and Know Your Customer, KYC, requirements. This is the Trojan horse. The government isn't trying to ban stablecoins. It's trying to absorb them. By forcing every stablecoin issuer to become a regulated bank, they are effectively bringing them into a system where they have oversight. They will have the authority to order these companies to freeze, seize, or block transactions deemed suspicious, all under existing legal frameworks. If you think this is a hypothetical threat, you haven't been paying attention. Remember the Canadian trucker protests in 2022? In an unprecedented move, the Canadian government invoked its Emergencies Act. This gave them the power to order banks to freeze the accounts of individuals linked to the protests, without needing a court order for each person. Even people who made small donations reportedly had their financial lives put on hold by government decree. That wasn't a test in some faraway country. That was our next door neighbor, a modern G7 nation. It was a clear demonstration of financial deplatforming. The US is not immune. The pieces are being put into place, not by some secret group, but in plain sight through financial regulation. They are creating a system where your access to your digital dollars is no longer a given, but a privilege that can be revoked. For years, many in the crypto world bought stablecoins like Tether, USDT, or USD Coin, USDC, were their escape from the traditional banking system. A way to hold digital dollars on the blockchain, outside the direct control of banks. That theory is now dangerously outdated. These stablecoins are centralized. They're issued by private companies. And because these companies operate in the real world, they are subject to real-world laws and government pressure. Let's look at the evidence. In cooperation with law enforcement agencies like the DOJ and FBI, Tether has frozen billions of dollars worth of USDT across thousands of digital wallets. This isn't a secret. If a wallet is suspected of illicit activity, Tether can add it to a blacklist in the smart contract, and the funds in that wallet become permanently frozen. The same power is built into USDC. Circle, the company behind it, maintains a public blacklist of addresses it has frozen, often at the request of law enforcement. Your stablecoins are only truly yours as long as you stay on the right side of the authorities that have jurisdiction over these companies. This brings us to the endgame, a central bank digital currency, or the digital dollar. Now, Federal Reserve Chair Jerome Powell has been publicly cautious. He said the Fed is in no rush, that it would need clear authorization from Congress, and that a retail CBDC isn't something they're actively pursuing right now. But here's how you have to read that as a strategist. A public facing CBDC is politically toxic. A huge part of the population values privacy and hates the idea. So, of course, the Fed is publicly downplaying it. Meanwhile, they are actively researching the technology through initiatives like Project Hamilton with MIT. The strategy isn't to force a CBDC on everyone tomorrow. The strategy is to first regulate and control the private stablecoin market. Get everyone comfortable using digital dollars from regulated companies like Circle. Then, when the next major crisis hits, a financial crash, a war, a pandemic, they'll have the perfect excuse to step in and say, the private system is too risky. For your safety, the Federal Reserve will now offer a direct, risk-free digital dollar. And just like that, the system tested in Vietnam gets fully implemented here. In such a system, every transaction you make could be on a government ledger. Your money could become programmable. Critics worry this could allow for things like negative interest rates, expiring savings to force spending, or even blocking purchases of things they disapprove of, like too much gasoline. It's the ultimate system of control. See this will against you. I'm thrilled about this opportunity because we make money by everything. Every major economic transition creates a new class of winners. My entire career has been about identifying these shifts before they happen. The key is to stop thinking about how to fight it and start thinking about how to position yourself to benefit from it. The capital flows are going to be massive, and they'll be directed into the companies building the infrastructure for this new world. Here's where I see the four biggest opportunities. Opportunity number one, the digital plumbers. In a gold rush, you don't bet on one miner, you sell the shovels. In this transition, the shovels are the payment processors. Every transaction that moves from cash to digital has to go through their rails. This includes giants like Visa and MasterCard, but also modern fintech leaders like PayPal and Stripe. Don't forget e-commerce platforms like Shopify that are the gateways to digital commerce. These companies win from the sheer volume of digital transactions. They are the essential plumbing of the new economy. The more cashless we become, the more valuable their networks get. Opportunity number two, the systemically important banks. This coming wave of regulation will be complex and expensive. Smaller banks and financial firms will struggle to keep up with the compliance costs. Who benefits? The giants. The big, too big to fail banks like JP Morgan Chase. They have the money, the lawyers, and the government relationships to dominate this new environment. Regulation is a barrier to entry, and these banks are already inside the fortress. As smaller players get squeezed out, the giants will consolidate power. Opportunity number three, the regulated gatekeepers. This might sound strange, but the very companies being forced into the regulatory system could become massive winners. Think about Circle, the issuer of USDC. If legislation like the Clarity for Payment Stablecoins Act passes, Circle could effectively become a new kind of chartered bank, one of a handful of fully licensed issuers of digital dollars. That regulatory moat would be incredibly valuable. They would become a core piece of financial utility, the trusted bridge between old money and new digital assets. An investment in a company like that is a bet on owning one of the official gates to the new digital dollar. Opportunity number four, the data kings. A fully digital, trackable financial system will generate an unimaginable amount of data. Every purchase, every payment, every loan application creates a data point. Where does all that data get stored, processed, and analyzed? The cloud. This is a massive, long term tailwind for the dominant cloud computing providers. Companies like Amazon with AWS and Microsoft with Azure are the landlords of the digital world. The more our financial lives move online, the more rent they can collect. They provide the foundation this entire new system will be built on. My personal strategy is to position my portfolio across these four themes. It's about owning the essential infrastructure of the future financial system. It's about skating to where the puck is going, not where it's been. Navigating this requires more than just buying a few stocks I mentioned. It requires a framework for understanding these macro trends, managing risk, and spotting opportunities before they become obvious. It requires a real world playbook, not academic theory. This is exactly why I created my macro investing masterclass. In the course, I distill everything I learned from my time in investment banking, corporate strategy, and building a global education company into a simple, actionable system for everyday investors. I teach you how to analyze global shifts like this one, how to build a resilient portfolio, and how to spot the asymmetric opportunities that can truly build wealth. This is the exact playbook I use to secure my own family's financial future, especially after my health crisis forced me to focus on what really works. This isn't about day trading or risky bets. It's about developing the strategic mindset of an institutional investor. If you're serious about protecting your capital and profiting from the enormous changes that are coming, this is your next step. I keep the group small to ensure a high quality experience, so spots are limited. Click the link in the description below to learn more and sign up today. The world is changing. A new financial system isn't just a possibility, it's an inevitability. The tests are running, the infrastructure is being built. You can choose to ignore it and risk getting caught on the wrong side of history, or you can see it for the opportunity that it is. The deactivation of 86 million bank accounts wasn't the end of a story. It was the beginning of a new one. Be an author of your own financial success in that new story. If you got value from this breakdown, please subscribe to the channel and hit that notification bell. I release videos every week on the major macro moves that affect your money. Now, I want to hear from you. What are your thoughts on this? Do you think a system like this is coming to the US? Drop your comments below. Let's have a real conversation. Thanks for watching, and I'll see you in the next one. The world is changing. A new financial system isn't just a possibility, it's an inevitability. The tests are running, the infrastructure is being built. You can choose to ignore it and risk getting caught on the wrong side of history, or you can see it for the opportunity that it is. The deactivation of 86 million bank accounts wasn't the end of the story. It was the beginning of a new one. Be an author of your own financial success in that new story. If you got value from this breakdown, please subscribe to the channel and hit that notification bell. I release videos every week on the major macro moves that affect your money. Now, I want to hear from you. What are your thoughts on this? Do you think a system like this is coming to the US? Drop your comments below. Let's have a real conversation. Thanks for watching, and I'll see you in the next one.